Gracias, Jorge. Thank you very much for your participation. Our chairman, Jorge Gil, has asked me as vice chairman of GLASS to coordinate this important outreach. And to start, I thank you, Tadeu, for all your continued support. One more time, you and the FASB staff members are here, and we are really very, very pleased, and we appreciate that. In this outreach are participating members of the GLASS board, members of the technical working group, the coordinator of this technical working group created by GLASS, Juan Gras, who will participate later, and many other interested parties in this important topic. We all know that in 2010, the first practice statement regarding management commentary was published, and now we have an updated version that we have discussed and analyzed very carefully in GLASS to be able to communicate our thoughts from Latin America that are, we believe, very important. Saying that, please, Tadeu, make the presentation, and whenever you want us to answer the questions you have in the material, we will be ready to do so.
Thank you very much, Felipe. Again, thank you very much for the opportunity for this outreach. We did one in Spanish. It was a warm-up, awareness process, and now we are doing this in English with the project team that are here with us. We have Julia, we have Jaco, Matt, and Joan with us today. Julia is the project manager, and she, together with the team, will make this presentation and will be available for any question that you want and comments that you want to make to the team. And without any delays, I just pass and hand over to Julia for start the presentation. I don't know, Jaco, if you want to share this. Yes.
Thank you very much, Tadeu. And good morning, everyone. So what we would like to do today is to provide you a brief overview of the proposals in the exposure draft. But because you already had an initial discussion with Tadeu, we will probably not spend too much time presenting, and instead we would like to hear your views and questions and comments on the board's proposals. And in particular, we would be interested to know your views on the IASB's overall proposed objectives-based approach, proposed requirements in relation to materiality, and also the board's approach to metrics and information relating to long-term prospects, intangibles, and ESG matters. If we go to the next slide, Jaco. So I would like to structure this discussion in 3 parts. First, myself and Matt introduce the project and just provide a brief recap of why the board is doing this project and what the board is trying to achieve. And then we will open the floor for discussion. And then we will introduce objectives-based approach in the exposure draft and again open the floor for discussion. And then finally, we will cover metrics and ESG matters in management commentary and again open the floor to discussion. So you are already well familiar with the project, so I would like to highlight just some main points. In IFRS literature today, we already have IFRS Practice Statement 1 that guides preparation of management commentary. But this practice statement was issued 10 years ago, and a lot has changed since that time. And I suppose there are 2 fundamental drivers or 2 fundamental reasons for why the board is doing this project. So on one hand, if you think about management commentary in its more sort of traditional sense, management commentary is there to help investors understand the company's financial statements and help them understand the entity's prospects for future cash flows. And what investors have told us, both in developing the proposals and in the outreach that we have already conducted on the exposure draft, is that in their experience, management commentaries often do not get them the information that they need. Management commentaries are often generic and boilerplate, and they do not focus on the matters that are really important to the company future. It's very hard for them to understand what is really important. Often management commentary takes a short-term view and talks about what already happened or what will happen sort of in the short term, but does not really cover the factors that can affect the company in the long term and that are important for the company's long-term success. Another very common piece of feedback that we hear from investors is that management commentaries are very fragmented. And on one hand, there is often disconnect between financial statements and management commentary, where financial statements tell one story about the company, and in some cases, financial statements might report a loss, but then management commentary tells a completely different story and may say that everything is excellent. And then oftentimes we've heard that there is also fragmentation of information within the management commentary itself, where complete discussion of all relevant matters is not provided. And finally, there is a concern about lack of balance, where management commentaries focus too much on the positive news and do not necessarily give due prominence to not such good news. So this is sort of more almost management commentary in its traditional sense, and where it doesn't quite meet investor information needs today. But in addition, over the recent years, the increasing role in enterprise long-term value plays such factors as intangibles and ESG matters, and there is growing interest in good information about ESG and intangibles. And again, management commentaries today do not necessarily provide this information. So the board was trying both sort of bridge those existing gaps in practice and also provide this new types of information that investors need. If we go to the next slide. And so fundamentally, what the board was looking to achieve in this project is to contribute to a globally consistent and high quality narrative reporting. And to achieve that goal, what the board was looking to do is, on one hand, develop the guidance that is flexible and that helps companies to tell their unique story instead of providing a checklist of requirements for information to be disclosed. On the other hand, the board was looking to provide enough structure and discipline so compliance with the new practice statement could actually be assessed and that the new practice statement could be enforced. And the board was also looked to develop the requirements which could be compatible with other requirements and frameworks. So, for example, which could be compatible with local regulatory requirements, as well as with sustainability initiatives, including future IFRS sustainability standards that would be issued by the IASB sister board. So with that, Matt, would you like to talk a little bit about the role of this document in the future?
I would say thank you, Julia, and hello, everybody. So on this slide, I just want to cover the role the board envisaged for its work. Now, as you know, this would not be an IFRS standard. So that means that companies will not be required to prepare a management commentary in order to claim compliance with IFRS standards. Now, the board took this approach because this is an area that is typically addressed by national regulations and guidance. But as Julia's described, the board saw challenges with current practice, even in jurisdictions with well-developed guidance and requirements. So the board saw a need and has set out to provide a catalyst for change. It's done that by looking at the gaps that it saw that existed in current reporting and also consolidating the many good developments that we've seen since the 2010 practice statement was developed. And this means it's going to be down to local regulators to decide how best to make use of what the board has produced. They could adopt the practice statement in its entirety. They could adapt its content into their own guidance, or they could choose to take no action if they're happy with what they have, or they see a different but better solution. And that also means that the board has left questions such as what scope of companies this should apply to. Should it just be listed companies? Should it be private companies? And questions of commercial sensitivity, so what exemptions to offer. They would also be down to a local regulatory consideration. Now, I just briefly want to mention ESG information at this point. I'm going to come back to the role of ESG information in a management commentary later, but I just want to highlight that information specified by our new sister board, the IASB, is likely to be needed in management commentary as a part of a company's overall story. So the emphasis in our proposals would be on using that information to explain the company's story rather than duplicating requirements that the IASB might introduce. And we're going to come back to ESG information later on in this discussion. But I think at this point, it is a good opportunity to hear your views. So we have a couple of questions for you there. So what are your views on the current reporting practices you see in your jurisdictions? Are there any improvements that you'd like to see? And are there best practices that you think perhaps we haven't reflected in our proposals that we should have done? So we would welcome your views at this point.
As I mentioned before, the coordinator of the technical working group for this specific matter is Juan Gras, who is here, and I believe he is the best person to give you a general comment on this matter. Tienes silenciado estás en mute.
Okay, we made outreach in several countries with the regulators, and in one country, and that was Panama, they were very interested to adopt it as it is, but that was the only case. In other countries, they said it was very interesting and that it will be helpful to determine if it could be implemented. However, in several countries, they have their own regulations, in many cases, very detailed regulations, copied in some cases from the SEC regulations, then there could be some kind of conflict. However, there was some interest. In Mexico, the regulator indicated that if they see that in other countries listed entities start to apply it, then they will ask the Mexican companies to do the same thing in order to have comparability with entities in other countries. But they will wait to see what happens in other countries. That was in general the case. In some other countries, by law, it's not just regulations, but by law, they have to follow and provide some information, and then this one will conflict with the one that is established by law. So there is a very diverse range of possibilities to adopt it or adapt it.
Thank you. So it sounds as though leaving the flexibility down to jurisdictions to choose what to do with this is yes, probably the right approach in your view.
Mm-hmm. So it will be to insist with the jurisdictions to see if they can adopt it. I think that if the IASB insists with them, they will tend to hear them, to hear and adopt it. Yes, but I think some lobbying will be needed by the IASB, and of course we can help in several countries to support what the IASB going to the regulators.
And can I ask, when you were doing your feedback, whether there were whether you found that regulators recognised the problems with current practice that we're describing? Do you think we've got that right?
Pardon me, I didn't understand the last.
Julia earlier described the problems with current practice that we were hearing. Do you think that is a fair description of where the problems lie?
Well, I think that the problem is that the regulator wants its rules to be above everything, and adopting something that he cannot control. In some cases, they don't like that very much, but in certain cases, they were interested and say that it was a very good document. It gave a very good image of the entity, and it will be very helpful. It will be very helpful in several cases. For instance, in the discussions we had with the Mexican regulators and bankers, some of them said that it will be a very good tool for the banks to ask their clients, their big private clients, not the public client, but to ask the big private clients to prepare a report following the management commentary. In that way, it will be some kind of standardized for the use, and that will give them a very good information on the business, and will help them in the know your client, which is something that the banks are now pushing ahead, to know very well their clients in order to determine to which they can lend money or not. Because due to all the changes in the environment, it is important to know the client, know how it will be affected by environment issues, by social issues, by government, by corporate government issues. So several banks were interested in using it for supporting how they can lend money to clients, to big private clients.
That's actually really good and really interesting to hear that, because of course, for the IASB, our customer, if you will, is, capital markets, it's sort of investors. And when I say investors, I mean capital providers in the broad sense. So in this case, you are talking about banks providing capital to their clients, and banks need good information about companies. So it's really good to hear that they felt that this is a good document. And what we say also in our discussions with stakeholders, that it's not only a regulator that could choose to require, for example, practice statement to be applied, but a company can choose to apply the practice statement, even if it's not required, if the company feels that it helps provide good information to the users. So in this case, banks. So I think it's quite actually quite positive to hear that.
Yes, I think that that's something that the IASB can do is work with the bankers and tell them, hey, you have this as a very good tool to better know your clients. Why don't you apply it to all your clients and ask them to provide you a report that will be confidential, because there were some reluctance in certain cases of giving that much information, because it could be sensitive if competitors will be able to use it against the entity, but it will be confidential and only for my purpose. And that kind of information will be very good for bankers to better know their clients. And that could be a very good way for the IASB to promote the use of the report by businesses.
In my personal opinion, the information in the management commentary is very interesting. It's non-financial information, and everybody wants to know about that. and not only bankers, but also investors and all that. One of the concerns I have heard is that companies who will provide the information requiring a management commentary document will be in disadvantage in comparison with companies who are not providing that information because it's not mandatory. And then there is very sensitive information about many confidential things. That's something that in my mind, I don't know how to solve. It's difficult, you know. For instance, in Mexico, companies who should, if the regulator requires this as mandatory, listed companies are about 500, and non-listed companies are thousands and thousands and thousands. And then if they maybe elect to use that, but are not required for do that. That's one concern that I don't know exactly how to solve.
This is quite a common comment we hear in some of our outreach activities, that companies are concerned about sort of disclosing of some information that they consider commercially sensitive. So when we were drafting the proposals, our intention was that the granularity of disclosure does not go to such a level that it goes down to information that is commercially sensitive. But I think it is fair to say that because we hear this perception or this feedback so often in our outreach activities, we definitely need to look at these provisions and to discuss them with the board. So thank you for that feedback.
Julia, if I can just add, based on my knowledge on the region as well, I mean, that the point is that as in very few countries, there is a kind of enforcement in terms of the quality of the management commentary. I know that in some countries, the auditor work stands to the management commentary, but it's just few countries. In the majority of the countries, it's just part of the audit report, you know, that kind of other information outside financial statements to be consistent and provided together. In very few cases, if any, there is a requirement to look at the quality of the management commentary. And then this is a barrier that I believe that if we can have some kind of assurance provided on this kind of report, it will be a big game changer. Second point, in terms of sensitivity, commercial sensitivity information, I fully agree with one, but one point is when everybody is a playing level field, when everybody is provided information. But I think what he's saying that if some companies start applying voluntarily, that's the main issue, because some will not do it. It's not everybody applying, and then let's discuss what is sensitive, commercially sensitive information. Another thing is before it, actually, when someone is disclosing something, that more information than another company. And then again, it comes to the regulators to try to define what would be the playing level field. I mean, that this is something that's quite important to convince regulators about that, even if we try to persuade, and sorry, it's a very personal view here, but if we try to persuade banks within your know your client policy, incentivize companies to include this information, I think it is looking at in a very holistic way to the market. It's better if we can have the regulator establishing what would be the level, the playing field for the companies in a country. It would be much fair. But today I can tell you that very few countries, if any, provide a reasonable level of assurance on management commentary as well.
Yeah, thank you very much, Tadeu. That's yeah, very clear where you're coming from. Thank you. So I'm looking at the time. Unless there are any further comments or questions, should we move to our next topic? Jaka, over to you.
Thank you, Julia. Let me just bring up the slides. So now I'll just briefly touch upon the objective-based approach that the board has chosen to go for. So as Julia mentioned at the start, the board wanted to strike a balance between giving preparers flexibility to tell their own story and then provide enough discipline in the requirements so that you can actually make that assessment of the quality, as Tadeu has alluded to now as well. So in this objectives-based framework, the board has first defined an overall objective of management commentary that is twofold. The one is backward-looking to enhance the user's understanding of the financial statements and what gave rise to the financial performance and financial position that is reported in those financial statements. And secondly, which is more forward-looking, to provide insights into factors that could have an impact on the entity's ability to create value and generates cash flows. And this is often referred to as enterprise value. And to meet this overall objective, the board has defined disclosure objectives in 6 different areas of content, which we'll turn to in the next slide, and also provide additional guidance on how to present and select material information with the requirement to focus on key matters in each of these areas of content, which again, I'll touch on a bit later. In terms of the areas of content, what is important to note is the board has defined them disclosure objectives for 6 different areas of content, but these are all interrelated. And it all comes back to addressing the problem of fragmentation that Julia mentioned at the start, so that everything that is disclosed in the management commentary tells a coherent story. So if we start with the business model, that is information about what the company does at the moment. Then you look to strategy, which is about where the company is heading, how it intends to develop this business model going forward. The next area of content is the resources and relationships, to tell users what are the things that both the business model today and the future strategy of the company depend on. And then risks that could disrupt any of these plans of management in the future. You also have the external environment that then provides information either to enhance the understanding of what has happened to the company in this financial year, or what could affect the company and the future financial performance and position going forward. And then finally, all of these areas, the information is provided to the extent that it provides that insight into either the current performance and position, or in the future, things that will affect the value of the company. And as you've mentioned, I'm sure you have gone through the disclosure objectives for the different areas of content in detail, and we're not proposing to do so at the moment, but please raise any comments that you've got on any of the areas of content. But I'll just like to highlight the board's thinking around the design of the disclosure objectives by using the business model as an example. So as you would have seen, there are basically 3 sets of area of content. There's the headline objective, assessment objective, and then specific objective. We often get questions around this and to other projects that the IASB embarking on, and specifically why choose three different types of objectives. The reason behind this is, whereas the headline objectives gives an overall view of the information that needs to meet users' needs for each area of content, the assessment of specific objectives different lenses to view what information needs to be provided. So the assessment objectives tell preparers why certain provided about this area of content. So in the case of business model, this would be so that investors and creditors have a sufficient basis or enough information so that they can assess how effective the company's business model is, how scalable and adaptable it is, as well as how resilient it is. In addition to this, why information needs to be provided, the board is also providing specific objectives which tell how information needs to be provided here. And in the case of the business model, this would be for users to understand the range, nature, and scale of the operations, the cycle of creating value, the impacts of the company on the external environment and society. So this links to the whole question of ESG that Matt will touch on later on. But again, bringing that back to the objective that this information is provided to the extent that it has an impact on the company's ability to create value going forward. And then also any information on progress in managing the business model. And to help users identify information that may be material, the board has listed examples of information that might be material that is grouped for each of these specific objectives. On the next slide, there's information about the additional guidance and requirements that the board is proposing in helping preparers identify what information is material and needs to be included to meet these objectives. And just like in the financial statements, the overall requirement is that information is provided if it is material. And the definition of material is also the same as that which is used in the financial statements, namely that which could affect the decisions that investors make on the basis of that information. But because the range of information that can be included in the management commentary is so broad, the board has introduced this new a toolkit to help preparers identify material information. And one of the main tools here is the requirement to focus on key matters. And the key matters are those matters that are fundamental to the company's ability to create value and generate cash flows. Furthermore, these are issues that are likely to be monitored and managed by management. So we often say these are the things that keep management up at night. So these are kind of top priority for management, and that is also likely then to be of interest to investors and creditors. Also important to note that these matters are likely to be pervasive and relate to more than one area of content. And we give an example here. For example, if you've got online shopping, one would expect that this key matter for a clothing retailer should be addressed when discussing both the current business model, future strategy, and the risks and impact on the external environment. In addition to the guidance on material, the document also contains requirements for completeness, balance, and accuracy, as well as other attributes of useful information. And these attributes are based on the conceptual framework for financial reporting. So again, it's the same underlying principles as is needed for preparing financial, although in some cases simplified terminology is used, and it is made relevant to information that is included in the management commentary. And an attribute is added, which is coherence, as I've already described, and that attribute that both across different areas of content within the management commentary and between the management commentary and the financial statements, it is important that the information tells a coherent story. That's a brief overview of the general. And what we would like to hear from you is the views on this proposed objectives-based approach, and whether you think the board has struck that right balance between flexibility and enforceability or discipline. And additionally, if you have any comments on the board's proposals and other guidance on making materiality judgments.
Technical working group has an opinion on this matter, Juan.
Well, yes, the group believes that the objectives were well defined, that they are balanced, that having a headline objective, then assessment objectives and specific objectives is a good idea, because you go from general to specific. Most think that headline objective will not be a problem. Assessment objectives may carry in certain cases some sensitive information, but not very much. In specific objectives, some of them will require information that in some cases some entities could consider sensitive, but and that will be a problem. Also, something that was indicated is that for auditing, for giving assurance on the management commentary, it will be somewhat difficult for auditors to do it, because they are working with something that is conceptual and not a specific rules, such as the ones that are in other frameworks for sustainability, like the one of the IRC or the SASB or the GRI, that are somewhat specific. Well, that have that are rule oriented. This being objective oriented, it will require more thought from the auditors how to make the assessment and how to give an assessment report, because it will be an assessment report. But it's a challenge, yes, but I think that auditors will be able to overcome that. And also in key matters are very, very important, and it's very important that key matters are the ones that management uses for controlling its business, for managing its business. But then again, in key matters, there was a concern about sensitive information, because if it's a key matter, that they could entail a sensitive information. That was that were some of the issues that were discussed in the working group.
Also, in some opinions emphasize the need to link materiality with professional judgment. It's something that cannot be separated. It's materiality and professional judgment have to work together. Some people believe.
Mm-hmm. Yes, and to make more emphasis to use the practice statement on materiality, of making materiality judgments, to make some to emphasize that more in the management commentary practice statement. It is indicated in the basis for conclusions, but several thought that should be indicated also in the main practice statement.
Yes, thank you for those comments. And I think it's fair to say that, again, it's sort of, directionally consistent with what we hear in some of our other outreach events. And in particular, you sort of point out this balance between materiality and disclosure objectives and the need to apply professional judgment on one hand. And then on the other hand, for auditing profession, it would be much easier, of course, to provide assurance if there was a specific sort of required list of information and they could sort of apply a checklist approach. And this is a challenge, and this is sort of the balance which the board was trying to strike in this project. Because of course, if we want to give companies a checklist, okay, checklist is very easy to apply, checklist is very easy to enforce, and checklist is very easy to assure, but does it result in any useful information? And then when we discuss this project with investors, and again, to be fair, both before we issued the exposure draft and also after we issued the exposure draft and we discussed specific proposals, so all investors consistently tell us that what we have in the disclosure objectives correctly captures their information needs. So this is exactly the type of information that they would like to see. So it's just a question of how to, on one hand, help companies make those materiality judgments and provide this information, and also whether there is anything else that could be done to support assurance. But overall, it's very consistent with the themes we have been hearing. Matt, do you have anything to sort of add or elaborate on from your perspective in this area?
On the operating.
I think I'll sorry, was that Felipe? Sorry, I had someone coming in.
I didn't hear all the question. Your question, Julia.
I was just asked Matt actually whether Matt had anything to add to my reflections.
Well, I just a very brief observation that this practice statement cannot solve the auditing problem. That's outside the IASB's remit. It is designed to provide a basis for determining whether a company has met the requirements, and we would really like to hear if you think we could have done more on that without straying away from giving principles-based requirements that allow a company to tell its story.
Well, in that case, the fact that there is a requirement that a company should state compliance with the practice statement, and if something is not there, to indicate it. Some countries indicated that okay, there is no problem in doing that, but not indicating why they did not provide the information. Just saying we did not provide this information, but not specifying why they did not. That was one of the questions we had.
Thank you.
The issues we had, yes.
I see Tadeu's got his hand up, so.
Sorry, actually it's a legacy hand, but as you gave me the opportunity, just to comment actually, especially from the audit perspective, I think that I personally think, and of course I couldn't think differently, that we got the right balance between the objective-based approach, because especially for a management commentary, it's quite difficult for coming with a prescriptive list of things that should be disclosed, as this is very tailored entity-specific information. But at the same time, I have been for many years already experienced auditors being able to provide different levels, let's say, of assurance to reports that also have this kind of nature. And I fully agree with you, Matt, that in the end of the day, auditors will manage to, and actually Juan said that, will manage to find a way to provide some level of assurance. I'm sure that this is going to happen, but the point is, one of the key questions that Julia included in this slide is relation to whether we got the right balance between flexibility and enforceability. As I said, as a board member, of course, I believe yes, but it would be important from our side to hear in your comment letter specifically in relation to this subject. Thank you.
Okay. We have indicated that, yes.
Okay, we can continue with the rest of the presentation, Tadeu.
Yes, I think so. Julia?
Yes, I think it's over to Matt now.
Thank you, Julia. So we can bring the slides back up. So in this last substantive part of our presentation, we really wanted to cover two areas that tend to attract particular interest. And the first of those is around metrics. So we'd really like to hear your views on whether we've got our requirements and guidance on metrics right. So just to reiterate that in a management commentary, metrics can relate to financial, sustainability, or other information such as customer or staff retention. And the metrics in a management commentary need to talk to the issues raised in each of the content areas. That's the idea of coherence that Jaco mentioned earlier. So, for example, if a company says its strategy depends on growing a particular section of its customer base, then it seems reasonable that they should report progress on that. And more specifically, our proposals recognise that material information about each of our content areas will often need to include metrics that provide insight into the potential implications of key matters and metrics that allow investors to assess the progress in managing those matters. On this slide, we've listed 4 examples of metrics about a business model. I'll just highlight 2 of those. So metrics might be needed to understand the scale of operations affected by a key matter, or they might be needed on a company's environmental impacts. For example, the volume of water abstracted at a key water stress site whose operation is under threat. But we know that there can be particular challenges with the use of metrics in management commentaries, and many of the concerns applicable to adjusted financial performance measures also appear to apply equally to non-financial measures. But in addition, we also hear investor frustration with the presentation of metrics that aggregate out divergent trends. So we've provided guidance on that. So our proposals explain how clarity, accuracy, comparability, and coherence of metrics should be achieved in a management commentary. And again, we would love to hear whether you think we've got the structure and balance of those proposals right. Now, before we go back to the floor for questions, on the next slide, I'm going to turn to long-term prospects, intangibles, and sustainability matters. These were all important considerations throughout the development of the board's proposals, but because they're pervasive, the exposure draft doesn't deal with them in isolation. They will also affect each entity differently. So our emphasis is on providing a rigorous basis for identifying material information rather than telling companies what that information should be. So if I start with long-term perspectives, first of all, you heard earlier that that's baked into the objective of a management commentary, which provides insight into the factors that could affect the entity's ability to create value and generate cash flows across all time horizons. Well, what does that mean? Well, the proposals ask companies to provide information relevant to an assessment of the company's prospects, so it doesn't ask management to make the assessment for them. So that's an important feature of the proposals. We're also asking companies to take into account the timing, likelihood, and magnitude of potential future events when they think about whether information on that event would be material. So these proposals don't ask companies to categorize different events by time horizon, but they do ask companies to think about events that could happen across all time horizons and provide information on the ones that they consider would affect an investor assessment of the company's future prospects. But we know that preparers find it difficult to determine what information about longer term matters would be material. So we've provided guidance to help preparers determine whether information about uncertain future events might be material, and importantly, when it would not be material. Again, would really love to hear your views on whether we've got that right. You'll also see that the disclosure objectives recognise the importance of this type of information. So, for example, information about a company's business model needs to be sufficient to support an assessment of its relevance and durability. Now let's turn to the middle box, intangibles. And you'll have seen that we have a content area to address the company's resources and relationships, many of which will be intangible, for example, the customer base, key distributor relationships, or indeed reputation. Now, these proposals ask for information about the company's key resources and relationships. And they might be key because, for example, they provide a competitive advantage, they can't readily be substituted, or they create a concentration risk, for example, in the company's supply chain. So, for example, an engineering business might need to provide information on its retention of business critical design team, but it wouldn't necessarily need to provide information about workforce retention as a whole. And I want to emphasize here that the information about intangibles, like all other information in a management commentary, should be based on the information used to manage the business. So the proposals don't ask preparers to, for example, assign values to individual intangibles. Now, I'll just finish on the right-hand side of this slide by covering environmental and social matters. If an ESG matter is fundamental to a company's future prospects, then it would need to be addressed across the content areas of a management commentary. And that is true whether it relates to a matter within the company's control, for example, polluting activities, or one that is not. And of course, we provided many illustrations in the appendix to the exposure draft to set expectations of what we mean there. So the exposure draft provides a robust basis for preparers to identify which ESG matters they should address in their specific circumstances and how to provide information on them, for example, to ensure that it's balanced. What it doesn't do, though, is provide a specific list of items to report or explain how individual metrics should be measured. And of course, that's where sustainability reporting standards, such as those to be issued by the IASB, would come in. Information specified the IASB is likely to be needed to meet the requirements of a management commentary. Equally, the IASB's work on this exposure draft provides a natural point for connectivity between the IASB and its new sister board, the IASB. So I think this is a good point to pause and ask you again for your views on whether you think we found the right balance in the requirements and guidance on metrics and on these longer term areas, whether you think we've missed something out or whether you think there's too much detail in the requirements. We'd love to hear your views here.
Well, the comment we had in the group is that regarding long-term prospects, it is very important to disclose the long-term prospects of the entity, to determine its resilience, to determine how it will operate in the future. Some countries indicated that there will be a better guidance on what is understood as long-term, since it could be interpreted in several ways. And another country said that guidance will be good to avoid omitting information on long term. So regarding long term, that's something that was generally accepted and considered that was very important. Regarding intangible and resources and relationships, yes, it's something that has to be disclosed. It's very important. And regarding information on environment and social matters, it was indicated that if an entity prepares also a sustainability report, based on any of the frameworks that are now used in the market, then what should be included in the management commentary are only the very relevant matters, because some of those reports are 100, 200 pages long and could not be incorporated as such in the management commentary, but just to incorporate the relevant matters of the sustainability report. That were the general comments that we had on this issue.
Thank you, Juan. Can I ask one follow-up question to that? So the approach we've taken with long-term matters is to try and bring it back to a question of whether the information would affect an investor's assessment of the company's discounted cash flow valuation. Were you hearing that was the right approach, and was it sufficiently clear that that's what we wanted in our proposals?
Yeah, because what is needed is how to create value, and value is not created from one day to the other. It takes time to create value, and then to generate the cash flows derived from that value creation. So long term is very important. Then requiring information on long term as one objective in management commentary is a good way to provide good information on how to create value and generate cash flows.
Thank you. That's very helpful.
One of the problems I see is that it will be very difficult to estimate the value of intangibles which are not accounted for in accordance with the accounting standards. For instance, we have in Mexico a very, very large company, a bread company, who is able to sell its bread, fresh bread, every day all around the country, in the small towns. All the effort and the talent that they have invested in these procedures, in these logistics, in this system, is not recognized in the financial statements. Now, how to estimate that and how to disclose that in accordance with the management commentary, I see as a very difficult procedure. But anyway, they will have to do it because it's a very important asset which are intangible and are not registered in the accounting standards.
Yeah, and that's thank you for raising that point, because that's a really good example of the sort of resource and relationship that we would hope would be discussed in a management commentary. Just to be clear, what we don't ask is for the management commentary to place a value on that resource or relationship, and that's partly because it probably makes no sense to give it a value on its own. It only has a value with the rest of the company's cash flows, and that's partly because we say, well, management's job is to provide the information to investors, and it's the investors' job to assess the value of the business. So I hope that you feel we've got the line right there, but if not, please do say.
Right.
Yes, I think that what this asks in the practice statement is correct regarding long term. Yes.
Thank you.
I don't think we've covered any feedback on metrics, did we? Or at least not explicitly.
That is a good point. Often an area that generates a lot of comments when we have investors in the room. So I don't know if there are any views on our proposals on metrics there.
Mm-hmm.
Well, we can continue with the presentation. It's still some topics to discuss?
Okay, I think it's back to you, Julia.
I think we pretty much covered everything, haven't we? So the only sort of thing we have left to say, I don't even know if we need slides for that, is that so the exposure draft is opened for comments until the 23rd of November, and we're very much looking forward to receiving your comment letter. And then we will work through the feedback and start bringing to the board analysis of feedback, probably towards of the end of Q1 next year. And then depending on what we hear in the comment letters, we will develop a plan for the next stage in the project. So that's, I guess, as much as we can say about next steps now.
Okay. One question that many people has is, many people believe that when the International Sustainability Standards Board publishes something, many of the topics will be very similar to the ones included in the management commentary. We are not certain, but we guess that will happen. Of course, I know that you are interacting with them, and for sure also with the International Integrated Reporting Council. Can you give us some input on what are you doing on this regard, please?
Well, perhaps I'll give a some brief comments. I'm sure Tadeu will sort of want to come in with the sort of board perspective. So I think the first thing to say was that management commentary was always designed in the expectation that preparers would turn to more detailed sustainability reporting standards for metrics on those areas. And when we started the project, the formation of an IASB wasn't being discussed, and it's great and really helpful that that has emerged as an event. So management commentary fits really nicely with the creation of the IASB, and it captures a lot of the IASB board's thinking on how non-financial information should be prepared and presented. Now, going forwards, it is going to be really important to get the work between the IASB and the IASB right. We are all very aware of that, but it's probably a bit early to discuss details as the IASB was only formed a week ago. And then before I give the floor to Tadeu, I just on integrated reporting, we benefited hugely from the contributions of the IIRC. So their technical expert kindly volunteered to be a member for our consultative group for management commentary. And when Julia talked at the start about consolidating innovations in practice, that was certainly one of the big innovations that she was referring to. So we hope that we have captured all the good things in integrated reporting there. Now I'll perhaps let Tadeu have a go on the IASB.
Actually, when we discuss about the interaction between the two boards, the IASB and the ISSB or IAASB, and some people say ISB. But the point is that we are convinced, for example, that, and we have been touched on this, that management commentary for many companies could even be the house or the home for receiving the disclosures related to sustainability, for example, the ISSB can develop. And based on this one, this project as ongoing project, it is likely to be one of the projects that there will be a strong interaction between the two boards as other subjects as well. I mean, that I heard, and I'm now borrowing some comments that I heard from Sue Lloyd, And Sue Lloyd is very good to talk about that because she was also part of the transition research working group that was created to allow this IASB having what we call running start, because the objective is to have something issued already, hopefully, by the end of this year, 2022. Not this year, next year. Because actually, if we have the board already working from March, April, because from March it's expected already having the chair and the vice chair. We have the prototypes, the one that is related to the climate-related disclosures. It's very much developed on the TCFD, something that many companies already are aware, but not all. It's still something new for some, and then there will be some time for adapting. But the point is that it is basically there, and then the board can work faster, quickly with this one. And there is another document that's similar to what we have as the IS1. That's a kind of overarching for preparing these disclosures, but relate to sustainability. And then this is something that will also get some knowledge from what we have as an IASB. But definitely when we think about strong interaction that can these two boards have, the management commentary is the best seller in terms of probably one of the projects that we will have to interact with them. Another project that's something maybe I'm too advanced in terms of making comments, but in the third agenda consultation, one topic that came up, and then we discussed it here as well, is the intangibles. I mean that there is a strong view that the board should do something in relation to intangibles, and especially those that are not at the balance sheet. And I think that this is also a point that there will be a very high level of interaction with the IASB. And then it is still, and as Matt said, we are at the early stage, but I think that if everything goes as we are planning, it is likely that there will be interaction with the board, and these two projects probably will be probably the one that we are likely have to have some interaction with them.
Thank you. I wonder if our other people participating in this outreach have any comment, any question from. There are several countries participating here. It's open for your questions. Brazil, Colombia, Uruguay, Argentina.
Okay.
Anyway, any questions?
Okay.
Juan? Any comment, in additional comment? No? From your side, any other message, Tadeu?
It's just to say thank you very much for your comments. I know that we have been interacting, having these outreach for many other documents. This document, different from other documents when we deal with an IFRS standard or amendment to an IFRS standard. This one is something outside the financial statements. Is not a required document, and then we know that few countries actually were even aware of the existence of this document, despite it is translated into Spanish, by the way. And not all feel, let's say, compelled to comment on it. But I believe that we are today in a different position if we compare with in 2010, when actually not many countries in Latin America were applying IFRS. Today, all are applying IFRS, and we are having a much more active voice and interaction with the IASB. And then I think that this is the moment that we can really contribute with that. And also we can see the importance of this type of information, despite it's outside financial statement, despite it's not an IFRS standard for financial statements, but based on the demand for information outside financial statement, complementing the financial statement, it's a very rich document. And I think that it is important for all countries if we can start put some light on this one, especially, and I fully agree with the comment that Juan made from the working group, that we can start working with the users, with the banks, but we definitely have to have the regulators also helping us to make this go ahead. It's a very rich document. I really think that this is something that we should fight for in terms of applying locally, even if it is just partially, even if we are just preparing something locally and based on what is in this proposal, but definitely something very rich. And I think that it is worth making each country aware of its existence and contributing to make this document as good as possible and applying locally. And then this kind of exercise that we are making here, it's quite important for that one. That's why I say thank you again very much for your contribution.
We fully agree with your comments. In the Latin American region, this document has been very, very well received, and it's very interesting, will be very useful. And that's the reason, because the technical group who has been working on this has done an excellent work. You will receive our communication very soon, before November 23rd.
Excellent.
Anyway, Jorge, do you want to close? ¿Quieres cerrarla?
Sí, cómo no, Felipe, muchas gracias. Cómo no, muchas gracias. Solamente mencionarle a Tadeu que compartimos con su expresión de que es un documento muy importante para los usuarios de la información y que complementa lo que hoy tenemos como información en los estados financieros. Pero, lógicamente, hay que luchar contra la percepción de quien emite la información de hasta dónde llegar con esa información sin que afecte información un poco interna y sensible para la empresa. Así que es un largo camino, no va a ser un tema sencillo. América Latina los apoya en todo lo que el IASB tiene como plan de acción, y por eso hacemos todos estos esfuerzos de los grupos de trabajo que nos lleva mucho tiempo tratar de analizarlos con profundidad y llegar a nuestra propia opinión como región. Y desde luego que contamos con el apoyo que hace el IASB y el staff explicando detalladamente los puntos centrales de cada documento, y nuevamente reiteramos digamos, el agradecimiento por todo el esfuerzo que realizan. Y a todos los miembros de los grupos de trabajo, en particular a Juan, que está llevando esto adelante, y a todo el directorio, muchas gracias por todo el esfuerzo que estamos haciendo. Y bueno, seguiremos ahora en otro grupo de trabajo, en otro documento que también estamos analizando con profundidad. Así que a todos, muchas gracias. Felipe, excelente la conducción, muy amable por todo lo que hiciste. Y bueno, nos veremos pronto. Tadeu, un agradecimiento a todos los miembros del staff a través tuyo, y nos veremos en la próxima reunión.
Thank you very much.
Gracias, Jorge. Thank you very much. Thank you.
Gracias
Thank
a
you.
todos. Thank you.
very much.
And thank
Bye.
you for some very insightful comments, particularly to the working group.
Take care.
Awesome.
Take care.
Bye. Bye. Bye.
Bye.